Hey traders, welcome back to the channel. Today we are diving deep into market structure shift plus displacement. I think this is the most powerful price action concept that you can learn to define your edge. So if you have been struggling with fake outs, maybe trend reversals or finding sniper entries, this strategy will change your trading basically forever and define your edge. So in this video I will be covering what market structure shift is, how to identify it, how displacement confirms a real trend shifts, and the best way to enter trades using market structure shift plus displacement. Also, I will be covering a chart examples, bullish and bearish market structure shifts, so stay tuned, drop a like if you find this helpful, and let's get started. What market structure actually is. So market structure shift is when price breaks a key high or low, signaling a potential trend reversal. So as you guys can see at top, we can see here that we are making higher highs, higher lows, higher highs, higher low. We are in a bullish trend. Then we took this liquidity. So as you guys can see, we took this liquidity. Then from higher highs, we go down, making like drop, and then making lower lows and lower highs. So after breaking higher lows, we are again pushing into downside, which is downtrend. So this is actually what market structure shift is. It's a trend reversal. So for example, here, if the market is in an uptrend, for example here, higher highs, higher lows, higher highs, higher lows, then we need to wait for market structure shift and price needs to break a key low. So that's bearish market structure shift. Here we can see that we pushed above. So we pushed above to taking this liquidity and then again pushing down, making this low broken and closing under it. So this is what turned into downtrend. So basically that's how it works. And if we look into bullish market structure shift, we first are into downtrend, which we are making lower highs and lower lows, and price breaks a key high. That's a bullish MSS or market structure shift. So here you can see same thing, So here you can see same thing. We are making lows and lower highs. Then we push down, pushed above, again making lower high, then again push down, taking this liquidity again, and then strongly pushing above, making new higher highs and new higher lows. And always at support or resistance, depends on the key levels you are looking for. So market structure shift helps traders to spot early trend reversals and avoid getting caught in the fake outs and basically take money from that reversal point. So this is how actually market structure shift is helpful. So now that you learn what MSS is actually, now let's talk about displacement that you will be using with market structure shift. So first of all, not all structure breaks or market structure shifts are real reversals. There are many fake outs that you need to find which is fake and which is real. So this is where displacement comes in. So displacement is a strong impulsive move in a price that confirms a real shift in order flow. For example, here we can see that we pushed from going downside, we pushed above, and you can see that this is a real displacement. But how can you identify the real displacement? First things first, you will look for large candles with a strong momentum. In this scenario, we broke above this, we took liquidity, and then we can see a big candlesticks pushing more and more above, showing us a strong momentum. Second thing that you would like to look for is minimal wicks. Again, you can see here minimal wicks. Okay, this one is not minimal, but still it's minimal. Now there is no wicks, Third thing is price often leaves a fair value gaps behind. If you don't know what fair value gap is, you can look on my YouTube channel about fair value gaps. And you can see here in this displacement, we can see a fair value gaps, like 3 of them. and it's strong fair value gaps. You are probably asking, why is this displacement even important? It is because without displacement, market structure shift could just be a liquidity grab, and displacement is like second confirmation that this is a real market shift. It's not some kind of fake. For example, if we talk about fake, this one is fake. Why? Second thing, as wicks, big wicks, big wicks, big wicks, big wicks. On every candle you see like candle on top and bottom. So this is a bad, plus there is no fair value gap. Yes, it's here fair value gap, but still this is a bad displacement. And this is how you can see that we pushed more above, and it's showing that this displacement is very bad. So now let's put everything together, market structure shift plus displacement, so you can get basically a high probability entries, and you can get basically the best trades you will ever have. Let's go through the steps. So first step is identify liquidity grab. You will always look to get first. For example, if we are looking for market structure shift, you will always want to look for this kind of thing, which is taking last low as liquidity grab and then pushing above. In this scenario, you can see that we took this last low before pushing more above. And if we take second step, which is wait for market structure shift to break key highs or key lows, depend on situation you are in. As you guys can see, we took low. I will just mark it. So we took low and then we pushed above. So there is no point of price turning back and taking again liquidity grab or something like that. Third thing is going to be wait for displacement. So wait to see displacement making strong pushes. Here you can see that we managed to have everything. No weak fair value gap and again strong push to the up. Now fourth step is going to be look for our entry, like key zone, for example, fair value gap, order block, breaker block, mitigation block, whatever, or some kind of key level that you are looking to get entry. For me personally, it's always a fair value gap, which you can see here that we have multiple fair value gaps, but I will always go to the last fair value gap because last fair value gaps in this scenario are much more stronger, so I always go to the last fair value gap. Last step, which is fifth step, is set a stop loss below or above the fair value gap or order block, depends on your situation, and always target liquidity areas. As you guys can see, we have everything that we needed in this trade, and everything is perfectly aligned together and everything works together. So this method will help you avoid fake outs and you will catch real trend shifts. So fake outs don't take your money for granted. So of course, before you start trading market structure shift plus displacement, please watch out for these common mistakes. It will be everything new to you, but just bear with me. Here you can see the first mistakes that people do is basically trading every break or structure and market structure shift. Not all structure breaks are trend reversal as previous said. So here you can see that we pushed above and then pushed again down and pushed above, which we broke down this low, but we are not going to trade off to sell because this is a fake breakout. There is no liquidity grab. You can see here that here is liquidity and we are rejecting just off of this fair value gap, and you can see that we are pushing down. Now if we move on, we can see that we broke above this high, previous high, and here this is liquidity grab. Now second mistake that people will do is entering too early before seeing a strong displacement, and here you, for example, say I will enter off of this fair value gap because I can see that we have strong momentum. Yes, one candle is strong momentum, but to be honest, in overall lookout, you will just lose your money with this because you place trade from here, you didn't watch displacement. As we said, only need one strong push. For example, this is a strong push to the upside, and we can see that we are going to the upside, and this is not a strong push inside to go bearish, because we managed to do this, but we need like strong one leg, and that's what this second mistake is. One strong leg need to be done to get inside of that trade, but people like to enter early because they want to trade. They don't want to make money, they just need that feel they are trading. Now, mistake number 3 is ignoring FVGs and order blocks. They refine your entries, so it's very stupid that you ignore fair value gaps or order blocks, depends which one you are taking. Here you can see on this displacement we don't have fair value gap or anything, because we first need to break this market structure shift to go down, and you can see that we had here, but it was such a bad displacement in here, and that's why we lost. After that you can see that it went to our TP, and basically that's how you need to stop ignoring FVGs and order blocks. You always need to go from it, but you need to learn when, because this is everything before market structure shift and displacement was made. So best tip that I can give you is that the best market structure shift plus displacement setups happen at key liquidity zone. So if it takes highs or lows, daily levels, or some kind of PD arrays, fair value gaps from 4 hours to daily, depends on which one you would like to be trading on. So as said, I will be showing you how it works on charts. So for example, first things first, we took this liquidity under, then we have here market structure shift as last lower high. We broke it, managed to make higher highs. Now, as you guys can see, we managed to get liquidity grab, then pushed above. This push left me, for example, the best candles with little no wicks and with the strong pushes. Of course, there will be a lot of fair value gaps in displacement, and as you guys can see, here is my main displacement between these two, and you can see here that it could get inside, and you could just place under this one candle where fair value gap was made, and you can aim for this high. In this situation you can see that we already take TP, and this is basically live trading, and you can see that you can use in different scenarios, and that's how market structure shift plus displacement is working. Everything is set and ready, and you can easily manage to make money with this simple market structure shift plus displacement strategy. So thank you guys, and from everything that you heard today, this is how we trade, or me, depends in which situation we are talking about. This is how I trade market structure shift plus displacement, and you can trade it like a pro. If this video is in any kind of way helpful, hit the like button and let me know in the comments. Also leave a like and answer me to this question: do you use market structure shift plus displacement in your trading? Also make sure to subscribe and turn on notification for more powerful trading content, which will be soon added to my YouTube channel. Thanks for watching, and I will see you in the next one.